to the module FAC. Welcome to the module FAC 1601. Right. So last year, this module was an online module. You had to complete a series of assignments. And I believe this year is still the case. Right. Though it's an online module, people, others may decide maybe to find someone to assist you, which might not be right because you won't have the subject content. And later on, it's going to catch up with you because you don't have the background of accounting, which you should have accumulated when you did this module. So what is advisable is, though it's an online module, or it is an online module, it is advisable that you attend classes and know the module, isn't it? Because what we want here, good people, in life is the lifelong learning, not just shortcuts. By chance, you then happen to have what? To have got 54%, then you move on to the next level of your studies. That's not cool. We want lifelong learning to say, even 5 years down the line, 10 years down the line, if someone can ask you about what you did in this module, you can be able to tell them at least a few things that you might be still remembering. So school is important, good people. Attend classes, get to know this stuff, and in future you might have to assist your child. And it'd be an embarrassment to say, you did the module, but I forgot it. When we did it back then, it wasn't like this and that. All right. So as an introduction to module there, I'm simply going to actually mute everyone and I will share my screen. There, I'm going to share my screen, but people are still coming in there. So all right, I'll keep checking. If there's anyone in the waiting room, I will then let them in.
While you're sharing, just for interest's sake, how many assignments were there last year for this module?
Last year, how many were there, by the way? I think they're around 6.
Is that?
It was a series of assignments. So what they did is they really did justice in asking, because you had to actually cover the entire module through the what? Through those assignments. So you couldn't manage to hit a topic and say, this topic, I don't like it, I'm not going to do it, because it will be tested in a certain assignment. It was a series of assignments, and they were very long. I think they were out of 30 and all that. Others were out of 60, etc. Yes, it was a busy year for those who actually studied last year. And I believe there's no change this year.
Cool.
Right. So, but as we take you through the subject content, surely you are going to pass at the end of the semester, because the ultimate goal is to pass. So passing will be guaranteed if you attend. We'll tell you everything, is it? It's a short, small tool, good people. Not complex, not complicated. So surely having gone through it with me, you will pass at the end of the day. Right. So I'll start by showing you what is expected of you. That is the syllabus for this module. Right. Let's get to see the syllabus. What are we going to go through and what are we going to be tested on? Right, this is FAC, good people. FAC is financial accounting, and financial accounting will deal with what? Financial reporting. So we shall be doing financial reporting in this particular module. So there is a syllabus. It's 9 study units. And for more information about our assignments, we'll contact the relevant tutorial later, and I will let you know as we progress with our studies. Right. Now, this is our syllabus. It says in unit number 1, introduction to the preparation of financial statements. Right. So that's just an introductory to the preparation of financial statements. All right. So we'll talk about what are these financial statements. In accounting, we report financial information through the preparation of financial statements. Right. So that's actually accounting reporting. Accounting reporting. Then we've got your learning unit number 2, which is the financial statements of a sole proprietorship. That's a sole trader, right? So we have to keep checking if there are people in the waiting room, yes, so that I can let them in. Right, you realize that these two you did them in FAC 1502. The introduction to preparation of financial statements, as well as the financial statement of a sole trader. It was done in 1502. It is not likely to be tested here again. So the syllabus for this module now, 1601, is going to actually take from there, going right up to the start unit number 9. So we are going to be going through, it's how many? 1, 2, 3, 4, 5, 6, 7. It is going to be 7 study units, good people. It's not a lot. So come to class, we just summarize this and we're done with it. So each study unit there might represent a week. So those are the weeks that we are likely to spend together. We do the revision, we do everything. We make sure that your assignments are in order. You pass and you move on to the next assignment, to the next level of studies. Right, so 1601 is going to come from there. But now, here's the thing, good people, is that these 2 learning units, you did them in 1502, and they are assumed knowledge. So the principles contained therein are going to be needed in your what? In your 1601. They will be incorporated in your 1601. So you find yourself applying those principles directly or indirectly. It's assumed knowledge. They've got the right to ask you about anything there because they know that you did it. But the crust and the core of our 1601 will start from establishment and the financial statements of a sole, of a partnership. Establishment and the financial statements of a partnership. Right. So as you progress with our studies, I will also be reminding you on the principles that were covered in 1 and 2, learning unit 1 and 2 there, so that they stay at your fingertips because they are also incorporated in here. Right. So just as a reminder there, a sole trader, it's a one-man business. That's what we are doing on 1501. The financial statements that you prepared then, they were relating to a one-man business. And what also learned in that 1501 is that now a sole trader now, there's no distinction between what the sole trader and the person and the owner himself. The two are actually one for tax purposes, right? You cannot register a sole trader there. No, you and your business are seen as one. The income from your business, sole trade business, it is taxed in your hands. When you prepare your financial statements, you'll be incorporating whatever you have there. And again, in that learning unit, good people, we got to define some key things, like the elements of the financial statements. We are going to look at what these financial statements are. They comprise of 5 sets. Okay, we'll talk about them. They also apply to your partnership there. Right. If you look at these financial statements, the common ones, we have got your profit or loss and your statement of financial position. In 1502, you defined what is an asset, which is an element in your statement of financial position. You defined things like what is a liability, which also an element in your statement of financial position. You also defined what is equity, which is an element of also of statement of financial position. Now, I jump to statement of profit or loss, right? In that statement, okay, before I go there, in the statement of financial position, that's where we show the financial position of a business, the assets, equity, and liabilities of that particular business at a point in time. Then the other statement that you'll be preparing or that you prepared, it was the statement of profit or loss. In the statement of profit or loss there, you were actually determining the performance of the business. You calculate, right? And in calculation of the performance of the business, you needed to know the income that was generated by the business. You needed to know the expenses for the business so that you can determine whether the business made a profit or loss during the period under review. So the statement of profit or loss, it is for a given period. And then the statement for financial position is the position of the business at a point in time. That's why the heading for profit or loss there, you were saying for the year ended. And when you come to the heading for the statement of financial position, you were saying X whatever statement of financial position as it. So this is a standing as at a particular point in time. So I've mentioned the 2 key statements there, right? We have got others that I'm going to talk about shortly. Okay. So that you did under the sole trade business, that was 1501. So now we're moving on to your 1502, right? So, sorry, it was 1502 and we are moving on to 1601. So you need to see where is the distinction. In 1502, you did what? The preparation of financial statements for a sole trade business, one-man business. That's what you did there. That's why they were saying what traders, etc. Right. Then we go on to 1601. What is covered here? It is also going to be financial reporting. We are continuing with financial reporting, right? This is going to be the preparation of annual financial statements for the following entities. Right. So what are these entities that are covered here? It is going to be the partnership. It is going to be the cross corporation. Later on, we'll talk about companies, right? So this module, good people, it covers a whole lot of things. And as such, it presents a challenge to students. You were used to the preparation of financial statements for one company. And all of a sudden now, they say, prepare the financial statements for so many entities, right? Partnership, close cooperation, as well as a company. So that's the challenge there that we have. That's the challenge that we are having. It covers a whole lot of things. Okay, so that's why this module is a little bit tricky, because you're trying to understand it as you go, find it like it's complicated and stuff like that. Right, so that's what you keep in mind as we start and progress to say, okay, in this module, the objectives are at the end of the day, we should know how to prepare the financial statements for the following three entities: partnership, close cooperation, as well as companies. Right. Okay, so today we are going to, okay, here we say it now, establishment and the financial statements of a partnership. So try to deduce something out of that topic. We're going to talk about the establishment of partnership, and we're going to prepare the financial statements for a partnership. Right, later on, we are going to look at the change in the ownership structure of a partnership. What happens? You are in a partnership, it was three of you, and then now maybe one of you dies, now you are two, or you want to introduce another partner, etc. Right? That happens through passage of time. If you've got a partnership, at some point in time, there shall be a change in ownership structure. So these things, they are written in what? In order. You establish a partnership, you run it, you have to determine profit and losses. At some point in time, through passage of time, you might have to introduce another partner as you grow. One of you might decide to go and start their own things. So that will constitute a change in the ownership structure. Right? Nothing lasts forever. At some point in time, a partnership might have to liquidate. So we are going to look at the liquidation of a partnership, the reality. Right? So that will be the stories about the partnership. Only 3 study units there relate to the partnership. Remember, we said that we are doing 3 entities here. So these first 3 now, 3, 4, and 5 relate to partnership business. So we are going to learn a lot about the partnership business in those learning units there. Right. It doesn't end there, good people. Right. After you are done with your partnership business, the nitty-gritties of the partnership business, you are taken on to the next stage, which is the financial reporting for close cooperation. This one, the CC. You do all the nitty-gritties about the close cooperation. You prepare the financial statements of the close cooperation, profit or loss, statement of financial position. Now it's etc. for a close cooperation. Right? That's another entity that is covered here. Right? Then we move on. Later on, you get introduced to companies. So that one, they say introduction to companies. Actually, this is just what they are preparing you to the next module. FAC1601. That one looks at the preparation of financial statements for companies. So here we are not going to prepare the financial statements for a company, a listed company, right? No, this is basically a private company. A closed corporation is a private company. So here, this one is going to be a listed company or a public company, right? So what is going to happen here? For learning unit number 7, we are not going to prepare the financial statements for a company per se, is it? It is just going to be some introductory. Whereas they prepare you for 16 or for 2601, as you can see, it is also there towards the end of the syllabus. Fine. Learning unit number 8, it is going to teach you how to prepare the statement of cash flows. Remember, we are looking at financial reporting here. We are looking at the preparation of financial statements for a partnership and a closed corporation. For a company, you're just going to do less. So this is another statement. So you will have to learn how to prepare a statement of cash flow for a partnership, which is the syllabus for this module, as well as for a closed corporation. Those two entities. Don't worry about the company for now, right? For companies, just a few stuff that I'm going to show you that you're expected to know there. Maybe it constitutes 10 marks. Okay. Then finally, we say that now you have been preparing these financial statements, calculating profit, showing the statement of financial position for the company. What next? You'll be required to interpret them, to give meaning to those statements so prepared. So this is going to be basically, when we look at the analysis and interpretation of financial statements, we are simply going to be doing ratio analysis there. Ratio analysis. We are going to be calculating some ratios that relate to profit or loss, ratios that relate to the statement of financial position. That one, good people, you just need to know your formula and you know your elements of the formula and you substitute to calculate to give them the answer. And you'll be very lucky to find the start learning unit number 9 in the exam. It is too obvious. So if you really want to assist me as I progress with the syllabus, you can be starting with your learning unit number 9. They will simply say, okay, this is how we calculate gross profit ratio. This is how we calculate net profit ratio, net profit over this over this over that times 100 times that, etc. That's simple. So if you can do that, it means that now it will leave me with only teaching you 1, 2, 3, 4, 5, 6. And the syllabus will be so nice and easy, short and sweet to finish. Okay, so that's the module. That's the overview of the module, right? So that you don't get scared about what is it like, what is likely to follow, what is likely to follow. No, you now have got the helicopter's view of the entire module. You now have got a comprehensive understanding of the entire module. You now know that when I'm here, you now know that the next thing that is going to talk about is this. And after that is going to be that. I don't want to teach people who are kind of in the dark, worrying about what is to follow. All right. So before I start where I have to start, maybe I can take, because we are a whole lot of us there, I can take 2 questions. Then we have to assist others. All right. Questions? No question. All right. No question. All right, let me share something there that might be of interest to you as well. Because I want you to understand this module. I want you to know what you're doing, isn't it? Not to be just guessing things. So I think this is to do with what you have to know. All right, so I'm going to share something again that helps you understand. So the starting of everything, good people, is to know the module that you're doing. Not to say, yes, I'm attending classes. Yes, we are being taught every day, but I'm not sure what are we trying to achieve. I'm not sure what we are being taught. Okay, here is your module one more time, people. I want you to know what you're doing and not be guessing what you think you're doing. Right. This is your module. It's clear there. This I'm getting from tutorial later. Right. You have passed there. You have passed there. You are here. That's why it's still kind of red there. So what are we going to be doing there? We are going to be doing the statement of profit or loss and other comprehensive income, statement of financial position, statement of changes in the equity, statement of cash flows, and notes. For which entities? For partnership and CC. The stuff for the companies, I will tell you what you're expected to do there. Right. So it means that it will be more of duplication. We are going to prepare the statement of profit or loss twice. One under a partnership, two under a close corporation. So we are going to double what we are seeing there. All right. I think I've said enough about your module. Now you know what we are doing. You know what we are here for. Now let's talk about the establishment. So like I said, that I'm going to start with this module actually starts there. So that at least even if you decide not to continue with us, at least you would have benefited something there. I'm going to start on learning unit number 3, good people. This is assumed knowledge. If it's no longer in your head, what do? Go back to your 1502 tutorial later, maybe just refresh, but don't punish yourself. No one is going to ask you about that. All right, so let's start on learning unit number 3 there. Establishment of a partnership. Right, a partnership is a form of business, right? Like I've said that first in your 1502, you did the financial statements of a sole trader. That was a one-man business. Assuming that he wants to grow and he joins hands with someone else, they will then become a partnership. So a partnership, good people, is made up of between 2 and 20 partners, 2 to 20 people, 2 to 20 people who are herein referred to as what? Partners. As partners. Right. If 2 to 20 people come together and form a business, that business is going to be referred to as a partnership. Right. Now, the question is, why go into partnership and share profits? That will be answered next. Why establish a partnership business? Why establish a partnership business and end up sharing profits? Right, it is for the following reasons. These are some of the reasons why people establish a partnership, right? To pull together what? Capital. Capital or resources for the purposes of what? Sharing skills. Right. What could be the other one? It could be to increase clientele. There are many reasons, right? I will send more to the group there from your tutorial later. The clientele base, maybe let's say A and B were operating separately. And if they join hands, they form a partnership now, their clientele base is going to be more than it was before. Right, and also for resources, capital purposes, to pull together capital. Okay, maybe you're a small business, maybe it's you started as a sole trade business, a corner business there. You don't have access to much capital there. Then you can call upon your friend to say, come and we form a partnership business, bring money. You're increasing your capital there. Or maybe there's a certain skill, knowledge, right? It could be also for knowledge transfer, right? Someone is highly knowledgeable in something in the business that you're actually operating in. But you don't have maybe, let's say, you can't hire that person as your employee and pay them a salary. The company is not big enough. So what you can do is you can say, you know what, let's be together in business and we'll share profit at the end of the year. Bring your expertise. Maybe it's a painting business there, panel beating business, etc. So there is a whole lot of reasons why people establish a partnership. All right. But can we be asked, why do people establish a partnership business? I doubt. All right. So there's a question there from Ruben. Ruben, you can go ahead. You can unmute and ask your question. Okay.
I think that hand has been up for a while.
Oh, it's been up for a while. Okay. All right. No problem. No problem. No problem. Let's do that. All right. So that was just the background. And when I do that, I was addressing the issue of what? Establishment. So the establishment side is almost done. Then you've got a little bit of a homework on the establishment there. The homework. It won't take you 20 minutes, people. Advantages and disadvantages of a partnership. Just get to know it. Remember, this is lifelong learning. You may not be asked this in the exam, but it is good to know it. Okay, so now having addressed the first part of the establishment, we now need to go to the second part, which looks at the financial statements of a partnership. Right, financial statements of a partnership. Right, now good people, a set of annual financial statements comprise of number 1, number 2, 3, 4, and 5. So a set of annual financial statements for any entity, regardless of whether it's a sole trade, partnership, or a close corporation, or a company later on, you shall find out next year or next semester, comprise of the statement of financial position, the statement of profit or loss and other comprehensive income, the statement of changes in equity, the statement of cash flows, and the notes. So now, because our topic here is financial statements for a partnership, I am going to look at these financial statements from the perspective of the partnership. The structure and the form and content differ depending on the taxpayer in question, but it's not a lot. The difference is not much. You need to know what the difference is. You realize that now, when we do these financial statements under a partnership, when we jump to close corporation, our simple saying, going to say, okay, this difference between the financial statements for a closed corporation and the one for a partnership, it's here. Then we start doing questions. Nothing more to overemphasize. All right. So today I'm going to pick one statement here and do it with you guys, right? And before I do any statement, I need to explain its components so that each and everything that is included therein, you know what it means and you would know where to get it, right? So now, according to your syllabus, they want you to know the first one, not the first one, but the one that I put in the second column there. I would say the statement of profit or loss and other comprehensive income for a partnership. Right. So in this statement, right, the performance of the partnership is determined. Performance, it measures the performance of the partnership business, right? This statement measures the performance of a partnership business. So when we talk about performance, we are saying profit or a loss. That's how you measure a performance of a business. Did they make a profit? Yes, they did. Oh, they're doing well. Did they make a profit? No, they made a loss. Actually, they're struggling. That's how you measure performance. Right. The next thing is going to be the elements of the statement of profit or loss and other comprehensive income. Right. Now, in measuring this performance, or rather, what are we going to see in the face of a statement of profit or loss and other comprehensive income? We are going to see the following. Good people. We are going to see the income of the business. Right? We are going to see the income of the business. That's how you measure performance. Take into account the income. What is it that they receive from the sale of their products or from the rendering of services? So this income, it could consist of revenue. Right. Now, revenue, this is income from either sale of goods or rendering of services. If you are a service provider, remember, to be in business doesn't mean that you are selling goods only. You can be a service provider, you can be a lawyer, accountant, etc. Right. So revenue is part of the income of the partnership and is actually referring to income from the sale of goods or services, depending on the nature of the partnership that you are into. Number two, we have got other income. Other income, this is income from non-core activities of the partnership, non-core activities of the partnership. I'm talking about this from the perspective of the partnership, but you might have the same also on close cooperation. Then I'll be changing the tone now. I'll be saying for the close cooperation, for the close cooperation. All right. Other income, this is income from non-core activities of the partnership. Non-core activities this is income that is generated, but not from the what? From the sole purpose of establishing a partnership. E.g., it could be interest income because the partnership is at a positive bank balance. It could be a rental income if you are not in the business of what? Renting out properties. So it can so happen that now you are a partnership business, you have got offices while you're operating, and you do not occupy all the offices. You decide to rent out some parts of the building, and then that rental income so received, because you are not into rental business, shall be classified as rental income. It is not your core activity. Number two, another source of your other income could be what? Profit on disposal. Profit on disposal of non-current assets. Non-current assets. Remember, the non-current assets, these are more of your fixed assets that you use in your business, right? You don't buy them with the sole purpose of what? With the sole purpose of selling them. But it can so happen, good people, that you have one of the old furnitures, one of the old equipment that you're using in business. You can decide that now, let me sell this one and buy another one. If from the sale of such a particular non-current asset result in a profit, that profit shall be treated as other income. So it is going to go in as other income. You will see where in the what? You will see where in the statement of profit or loss, this other income is going to lie. Right. So also we have got bad debt written off, or credit losses recovered. Credit losses recovered. So credit losses recovered. Now it works like this, good people. This is more of a reversal of an entry. It can so happen that in business, right? You are selling on credit, you're rendering services on credit. Obviously, some of your customers will not pay you. And that money lost through bad debts, we refer them to the bad debts, that money that is not recovered from your clients. It is going to be expensed in your profit or loss, right? And now it can so happen that maybe someone was not paying there because they were going through hard times. Then in future, that person who had gone bad in the prior years comes forward, an honest person, and say, okay, I know I owe you, I was struggling, I'm here to settle my credit. How much do I owe? They pay. And now when they pay there, we then have to take a step back and think, what was the initial transaction? Okay, when they fail to pay, we expense them. Now that they've come forward to pay, let's reverse that entry. Let's treat this as other income. Bad debts are recovered, credit losses recovered. So right, the element number one, good people, was the income, and I've broken down the forms of income that we have. And the other one, it is going to be your expenses. That's the next element. That's the other element of the profit or loss, expenses. Right. Now, in your profit or loss, right, in your statement of profit or loss, you shall see the framework shortly. You put your income and expenses for the period. So the income here, it should be for the period under review, that period of 12 months. And here again, it will be the expenses for the period under review. Right. So that's why we talk about what? The matching concept. I think you did this, the matching concept. Some time back, you might have read about this, that you match the income with the expenses to which they relate. So the income for this period should be matched with the expenses for this period. Okay. Right. So your expenses there, good people, expenses comprise of one, you've got your cost of sales. You see where they fit in. You have got distribution expenses. You have got admin expenses. You have got other expenses. Okay, so now you see these on the face of your profit or loss as we prepare it. Okay, there's going to be finance cost also. These are the borrowing cost. Right, that's the profit or loss. That's the one that we are looking at today. That's our target. Right, so I continue here and say now that the profit or loss, the profit or loss statement is prepared on accrual basis. Right. So what we mean by that is this. Remember, we said we put expenses and income in our profit or loss. So those expenses and incomes that we put there, we are going to put them on accrual basis to say those that relate to this period, whether they've been received or paid or they are due and payable. Right. So I'll give you an example there. If rental expense is 100,000 for the period, but what was only paid there is 80,000. Right? It means that an amount of 80,000 of 20,000 is outstanding, yet to be paid. Now a question arises now as to how do we apply this accrual concept? The accrual concept says that in your profit or loss, the expense to show as rent, it is the amount that was incurred for that period, being 100,000, whether it has been paid for or it is still outstanding. We don't care. The rent for the period, the expense for the period is 100,000. 80,000. We are not going to record what we have paid, the 80,000, as the rental expense for the period. That will be wrong. If you are to do that, then the basis that you are preparing your profit or loss is cash basis. You are looking at the cash paid and the cash received, which is wrong. That's not what the IFRS say. Profit or loss is prepared on accrual basis. Accrual basis is saying that now we look at the money that accrued during that period in the case of income, and the expenses for the period in the case of expenses, not what is paid there. I hope it's clear. Right, same applies to your, let's say, revenue now. Revenue, we might say sales amount to 200,000, right? Of which we had cash sales out of that 200,000, an amount of 150 represents the cash sales, the cash that was received with respect to the sales for the period. And then the balance there is credit sales of 50,000. So now in our profit or loss, what do we record? We apply the accrual basis. The accrual basis of accounting, it is going to say the sales for your period, what you are entitled to for the period is the amount of 200,000. So in your profit or loss, we see the 200,000, not only the cash sales received. If you are to record cash sales there, you are making a big mistake. You are no longer applying the accrual basis of accounting, but you are now preparing your financial statements on cash basis, which does not apply in the world of IFRS. So that's the concept of accrual. Right. Again, another concept that is key here is the concept of prudence concept. Then I'm going to say another concept here. Prudence concept is applied in the preparation of the statement of profit or loss. So now the prudence concept. To be prudent, good people, I can say roughly it is to be wise there. And what else does prudent? Prudent, it means to be wise, right? Right, so what do we mean by this? And how do we apply this concept? So you have been applying this concept now in your previous FAC module there, but maybe you didn't know what you were actually doing. So now this is what the prudence concept says. You are being wise there. I'll give you an example there. If maybe a company makes sales amounting to 100,000, right? And then you grant a discount, settlement discount granted. Or let's say there's a discount granted, maybe for prompt payment, amounts to 30,000. So what you should record as your sales, good people, in the books of accounts should be an amount of 70,000. Right, this becomes your net revenue. Are we together? So by doing that, you are applying the concept of prudence. You are being wise. You'll be a fool to state yourselves as 100,000, knowing well that you granted a discount of 30,000. If also some of the customers also retained some certain goods, yes, the initial sales amounted to 100,000, but we have received the returns, sales returns amounting to 10,000. So what would a wise man do? A wise man will appreciate the fact that the money that will be received will only be the net amount. Hence, the wise man will record their sales as the net amount of 60. You're applying the prudence concept. You are a wise man there. You are not fooling yourself. Right. So now the issue of the prudence concept there, it says that we must not overstate our income. We must not understate our expenses. We must not overstate our assets. That's the concept of prudence. You see there, we are not, same applies to trade receivables there. what do the prudence concept say? Maybe your trade debtors owe you an amount of 100,000. But we all know, good people, that now, if you're being owed money, you might not receive all the amount being owed. So what a wise man would do there, he would say, okay, I will be overstating my trade receivables if I leave them to hit my books as 100,000, given that now, if you're selling on credit, some customers will surely not pay. A wise man will come here and say, less allowance for credit losses, Then you give your estimate for allowance for credit losses. If you estimate that 20,000 will not pay you, you take out the 10,000, then you record your trade receivables at the net amount of 80,000. By so doing, you are applying the issue of what? The concept of prudence concept. You are being wise there. Right, sharp. So now I'm going to then give you, these are the main statements, these are the main concepts that you should keep in mind as you prepare these financial statements. Right, so now I'm going to now proceed and give you the what? The framework of this statement of profit or loss and other comprehensive income for a partnership business. For a partnership business, right? So you at the top there, you put your revenue. It should be net of what? Settlement discount. It should be net of sales returns. Settlement discount granted. This is the discount that you would give when you grant to give to your customers. Then you say less cost of sales. Cost of sales, good people. This is cost incurred on the goods being sold. So now to determine your cost of sales, good people, it is going to be a calculation like the following. You start with your opening inventory. You add purchases, right? Opening inventory, add purchases. You get the sum of the two, good people, is referred to as the cost of goods available for sale. Available for sale. And it makes sense and logic to say what I had at the beginning of the year plus what I bought in the current year for resale. You get the cost of goods available for sale. And then not everything that is available for sale is sold. Then you can come here and say less closing inventory. Take out your closing inventory. Then this will represent the cost of your sale, the cost of goods sold. Now, if you say revenue, less cost of goods sold, you go down there and get your gross profit. Right, if this was 1 and this was 2, gross profit is 1 minus 2. Gross profit is sales minus cost of sales. So you should be able to execute that cost of sales calculation there. So we'll see when we actually do this in practice. Right, so I'm actually departing with your framework. I forgot to write my heading there. The heading, name of the company, and then statement of profit or loss and other comprehensive income. Then you proceed. Right. Right, we move. After that, we say other income. We see where your other income will come from, will come in, where it kicks in. So other income, this we say it's income from non-core activities of the business. Like your interest income, good people. If you have a positive bank balance, you'll be paid interest by the bank. But did you set up your business to get interest? No, it's non-core. You have got excess space that you're not using. You decide to rent it out, you get your rental income there. It's non-core. You have got some non-current assets that you have chosen to sell, right? You make a profit. Then that profit on sale of non-current assets will come in there. We have got a debtor who had gone bad and expensed their amount that they failed to pay. They come forward now in future when they stabilize financial, they pay. Then you say credit losses recovered. Recovered. They go in there. Right. You sell some goods on behalf of someone for a commission, incidental. You are not a person who actually set up their business to receive commission, but you receive commission from someone by accident. It's non-coactivity. It will be commission received there. Causing there. Right. So these are your common non-cooperating income that should go in as other income. You add them together there, people, you get their total. Now, what you should keep in mind is that now, what we are seeing there on the face of the profit or loss, it should be income and expenses relating to the period in question. Right? If there's a rental income, someone pays, let's say this we were doing 2020, and then your tenant pays you also part of the rental income for 2021. Right? The matching concept says that now, that which relates to 2021 should be taken into account in 2021. So we'll subtract it here and remove it. It's for 2021. We only want the incomes and expenses for this period. Hence, we're saying for the year ended, we want that which applies in the current year. All right, good people. So let's say this is 3, the gross profit is 3, other income, I denoted it as 4. You shall add the 2 to get an amount there, which I can call 5. Now, this amount, good people, you don't label it as anything, it's just that. And you shall leave it as such. Right, we move on to the next thing with our framework. That's what you'll be pasting down. Right, we come to now expenses other than cost of sales, distribution, administration, and other expenses for the period on accrual basis, whether paid for or yet to be paid for, as long as they relate to this period, we paste them there. These expenses are many, good people. Familiarize yourself with these expenses. Things like salaries and wages. Right. Now, because we are on partnership, these salaries and wages, good people, profit or loss for a partnership should not include salaries and wages paid to partners. I'll put that in red because that's the principle being tested. That's the difference between the profit or loss for a sole trader and the profit or loss for a close corporation. In that, for a partnership, salaries and wages expense paid to other workers, yes, it's allowed as a deduction there. It is allowed to be expensed. But salaries and wages paid to the partners themselves, it does not hit the profit or loss. So these salaries and wages, I'm going to indicate there that excluding salaries and wages paid to partners. Now, the salaries and wages paid to partners, good people, we have got a special account where we record any transaction between the partnership business and the partners. We record that in the current account. Right, or it also hits your statement of change in the equity there. So any transaction between the partners and the partnership business is recorded in the current account. So when the partners render their services to the partnership business, that is a transaction between the partners and the partnership business. So where is it going to go? In the current account. So now, in the exam part, are they going to give you salaries and expenses excluding the what? The wages paid to partners? Sometimes they do. Sometimes they can give you the salaries and wages paid to the partners, right? Salaries and wages account for the partnership business, including the salaries and wages that were paid to the partners. In that case, you need to take out what was paid to the partners. Right? So that's a concept to take home. If you got this, if you understood this, at least for today, you learned something. So this we must all take home with us. That's key, because it cannot be forgiven if you are going to deduct salaries and wages expense in the profit or loss, including the salaries and wages expense paid to partners, right? Other things there are going to be your depreciation, which is not key there. Your depreciation, your rental expense for the partnership business, electricity, bank charges, and other expense that you can think of, right? You group them together like this. There are your expenses. There are more than that, right? Stationery consumed, you put them there, right? So remember, we said on expenses there, I said they comprise of cost of sales. You saw where cost of sales go, and then we've got these three. We bundle them together. I said distribution, admin, and other expenses. Now we come to finance cost. Finance cost, good people, it is shown separate. It is a borrowing cost. It is shown separate. That's another principle. If you're going to include your finance cost there on that list, it's going to be a big problem. There's a principle that you did not get during classes. So your finance cost will come here, outside. Finance cost. Finance cost, this is the cost of borrowing. Your interest on bank overdraft, interest on bank overdraft, interest on long-term loan, that is a borrowing cost. Interest on debentures, if any, you add them, you put it there. Right. Now, let me say this. Remember, I'm moving with numbers. We are now here. We said, assume this is 5 and you know how to get to 5. Let's say now our expenses, we denote them as 6, right? And our finance cost, we denote them as 7, right? We have identified all our incomes. We have identified all our expenses. So now we are moving all the way to profit. There, here, we are going to say profit or loss for the year. This is key there. Profit or loss for the year. Now, how do I go to profit or loss for the year? I will start here, right, on 5. I say 5 minus 6 minus 7. I get my profit for the year. Because these, we box them, right? We box them. This amount represents the sum of everything inside the bracket. And this amount here represents everything inside the bracket, profit or loss for the year. Right, but that statement is statement of profit or loss, another comprehensive income. So after that, good people, I think if I write at the bottom there, you might not see. So let me go to the next page. But you're continuing simply under that profit or loss for the year. Then you say other comprehensive income. Other comprehensive income, you put it there, and then you get your total comprehensive income for the year. Total comprehensive income for the year. Right, I'll tell you what is this comprehensive income, other comprehensive income. Right, so that's where your profit or loss ends. Good people. That's where your profit or loss ends there. Profit or loss ends there. Profit or loss ends there. I hope you are following on the concepts and the elements. Now, let's say you don't know what is other comprehensive income. Other comprehensive income, right? It is going to be increasing. These other comprehensive income elements are going to be increasing as you move from one stage of accounting to the next. But for partnership business purposes, right? For the purposes of FAC1601, the other comprehensive income, we are only looking at what? Revaluation to land and buildings. Not a common feature, but that's your other comprehensive income, right? If there was any land that was revalued in the current period, if there was any building that were revalued in the current period, so they are going to what? The movement is going to go there, right? So some notable things to take note of that I might need to highlight again is the issue of cost of sale, purchases. What comprise purchases? Purchases are made up of what? So I was thinking out that one so that you know the calculation for purchases, it is key. Right, purchases will comprise of purchasing cost, what you pay for your inventory, purchasing cost of your inventory, right? Transport cost for that inventory. Or rather, instead of transport cost, I will have to say now plus any direct attributable cost, plus any direct attributable cost. Any direct attributable cost, e.g., so when you say direct attributable cost, we say that the cost that is tied to purchases should be capitalized to purchases. It should be included there in the purchases line. Right, this could be the transport cost, good people. Transport cost to bring that inventory purchased to your premises. It could be the import duties. In case your inventory is bought from another country, you will pay import duty at the border. Right. Okay, and then also you need to say less. Your purchases should be less of, number one, purchases returns. That's also Prudence concept today. If you bought inventory and part of the inventory, you return it back to the supplier. Honestly, you're not going to pay that portion of the money. What would the wise men do? You don't take that into account as a cost. Settlement discount received by you. Settlement discount received from your customer, from your supplier. If they give you a discount, you shall take it out. Prudence concept there. And drawings. Right, purchases, good people. When we talk about purchases, we are talking about the inventory that you bought for resale. So if the owner happens to take some of the inventory for their own consumption, we refer to that as drawings. So that which is applied for your own consumption for the consumption by the partners, because you're in partnership business, should not be considered to be purchases for the purposes of business. Right, then you get your net purchases. These are the ones that should hit your statement of profit or loss. All right, now for the interest of time, the other thing that could be a monster here, good people, could have been the issue of depreciation, but I'm going to explain it next week or as we do the question there, because if I'm to explain depreciation now, we might not go to doing what question. The policy is before the end of any class, because of course it's an accounting class, a question must be done to consolidate the principles so lent. So now that pushes me to go and do a question in the next few minutes, so that now when we leave here, we had the theory and we saw the application of theory. That's learning in accounting. That's learning in accounting. Right. So the other things I'm going to explain as we go there, because for now we are just chasing this 1 hour, 30 minutes allocated. All right, so there we go. Let's see if we can put this together. Right, here is a question. And this is your institution, UNISA. They say when you're answering a question, you start first with the required. Here is the required, good people. Prepare the statement of profit or loss and other comprehensive income of the traders for the year ended 31 March 2020 in accordance with the IFRS appropriate to the business of partnership. So you're applying your knowledge for partnership business. This is the profit or loss. This is the information given. The following information pertains to the partnership. Trading as to the traders. Partnership, you put on your partnership head knowledge you're about to use here. And the statement to prepare, they say it is the profit or loss. So what do? You paste down your framework with people. Can we paste down our framework that I gave you? But you don't put the amounts, because we are going to be getting the amounts practically from the scenario. Okay, so I'm going to give you 2 minutes to try and paste down that scenario, okay? But let me explain this, what you're gonna do now. Okay, don't do anything. We'll do it together. I'll show you the approach, how you shall answer that question. So in the meantime, I just want to quickly answer a few questions there. There was a question to say, are we going to be able to receive the recording? Yes. Okay, all right, okay. At the top there, someone wanted my name. Okay, I'll give that name. And oh, right, fine. I didn't receive any study guide for tutorial. That still is it the case for others also. Okay, if you did not receive it, I have received it. I will share with you guys whilst you are waiting to deliver. I didn't do 1502 yet. I applied to do it semesters 2. Do I have to do 1502 first? No, you are fine. I will take you through that, isn't this 1601? You can do it without having done 1502. It's still fine. You still pass. Right? You're not seeing the screen now. You see it. Okay, screen's sorted. And then, right. Do we purchase the prescribed book? No, if you're going to be attending classes with us, you don't have to buy the prescribed book. We are actually going to take you through everything there. If you try to study alone, yes, try getting it. Right. Oh, so there are others that haven't done 1502. Yeah, if you didn't do 1502, right? It means that UNISA should have said that it becomes a core module. You should be doing it with this, but don't worry. That's why we are here. It's fine still. If they were able to register you for 1601 without having done 1502, it's okay. So remember, we said the assumed knowledge is only for those 2 small things. So you won't fail again. Right, the confirmation of the salaries and wages for partners go to the balance sheet. Right, they go to the account in which we record the transaction between the partners and the partnership business. And that account is referred to as the current account. Right, it's an account there. It does not form part of the annual financial statements. It's an account where we record that. Okay, all right. It's okay if you're not seeing anything. I was reading the messages, so I can't share people's messages. Maybe someone is attacking me there, and then you laugh at me. Right. So here we go. I've shared a question. There that we should try and do in 15 minutes so that you have something to do between now and until we meet. Right, so now this is how we respond to that question in question. Hey, this one must go. Right, I'm sharing my screen. So we have read the question. Okay. All right, okay, there's another question there. I need to clear this confusion. Yes, the salaries and wages for employees go to the profit or loss. The salaries and wages for the partners, it is the only one that should not go to profit or loss. Once you do that, they'll give you a 0 there because that's the only principle that differentiates between the one for partners, the profit or loss for a company, and that for a partnership, etc. Right. So, right. I would try to, I'm not going to rush. Yes, but I have to explain. Right. Later on, we are going to increase this thing, the classes a bit, because these modules are normally done by you guys maybe for the first time. Right, here is this, we want to prepare the statement of profit or loss and other comprehensive income for the end of that. Now, this is what you do. I've just read the required, and how am I going to approach that one? Having read the required, I simply go now to say, okay, I have to paste down the framework. Right, the framework, I would say, do the traders, right? Statement of profit or loss and other comprehensive income for the year ended. For the year ended 31 March 2020. I underline that, isn't it? Right. Now it's key that you state for the year ended it shows that it is for the period. This profit or loss is measured over time and not at a point in time. When you do your balance sheet, you see the difference. Thereafter, I would draw, I need one column, good people. One column, the one long column, because there will be a lot of things to put there. One column for the amounts, right? One column for the amounts. Then I move on now and I paste down the framework. Straight, I paste down the framework. The framework says revenue less cost of sales. Through practice, you'll be now able to write it like that. Then I say opening inventory, add purchases. This will come through practice. I go and underline there. I know that if I add this and this, I get the cost of goods available for sale. Right, I say less closing inventory. I take out my closing inventory, then I box this all the way up to just under cost of sales. I will separate my cost of sales like that. Thereafter, I say gross profit. Right, under purchases, normally your purchases, they will have a whole lot of things there that are entailed. You might skip a line, or okay, you're writing in a book there, you might have enough space to show. Then gross profit will go there. After that, I consider my other income. Right, my other income will come in here. Right, so for my other income, remember, I can't just paste down everything that I say comprised of other income because some may not be in the question. So what am I going to do? I am going to be prudent. I'm going to be wise. I'm just going to leave a reasonable space for my other income. Then I box them. Maybe 5, I doubt they can bring other income that amounts to 5. Then I box there. Then I box there. Right. Then I'll put that total there for this and that. I page on to the next now. Here now, how does the framework go? It says distribution, administration, and other expenses. Can underline that if I want. All right, I don't know which distribution, administration, and other expenses are there. I'm also going to be prudent. I will leave enough space. But maybe at this stage I can start, because if I write my finance cost there, maybe my expenses will be more. They will now want to overlap and it won't be looking nice, right? At that stage now, after pasting your framework and going as far as that, you can start. Then after you are done with all your expenses, then you can bring in the issue of finance cost and your other comprehensive income and move on, right? So now you can then start with your question there. Right. So we read, and you deal with things as we come across. Don't say we are going there to look for revenue. No, we deal with whatever we come across first, and it belongs to profit or loss. We take it there. That's the purpose of pasting down the framework. Right, we move. Capital, it doesn't go there. Capital doesn't go there. Current account doesn't go there. Current account doesn't go there. Drawings don't go there. Drawings don't go there. But we have got the issue of office furniture. Office furniture could be, we know that if you've got a current asset, you are going to have depreciation. I can simply go there and write depreciation. I'm going to work out the depreciation for those things. I have to come up with I'll work out my depreciation later, right? So I'm not going to jump to depreciation now. And my depreciation, I know that it can take me forever if I'm not sure about it. So I can put it there and move on, and I'll do my depreciation last. So, all right. Then the issue of vehicles also, it tells me that there's depreciation. Accumulated depreciation, they tell me about depreciation. Accumulated depreciation, they tell me about accumulated, that there's depreciation. Then I come to long-term loan. This long-term loan, good people, it tells me that there is going to be a finance cost. Right, I'll indicate that. After I've done extracting all those things, then I have to remember my finance cost as well. So I have to put it there and it should be clear. And my finance cost, because I didn't put it in my framework now because I don't know how long my expenses would be. I simply have to remember it. and I'll do it. Right, I move on. Now we've got trade receivables. They do not trigger anything. They don't hit our profit or loss because they are assets. We have got trade payables. They do not hit our profit or loss because they are a liability, they call financial position. I've got bank overdraft, it's a liability, it does not hit my profit or loss. I've got allowance for credit losses for the prior. Now, this is how it works. When you see the allowance for credit losses, this is the estimate of the credit losses that we thought we are not going to recover them in the prior. So the one that is there in your profit or loss, right? It's expensed. Part of the expenses, the allowance for credit losses, right? The one that is going to be listed on the TB, trial balance, part of the expenses. And it is combined together with credit losses. So I'll come here now and say credit losses, open bracket. I start with that allowance. I start with the allowance. I will say the allowance is 2550. So as another principle to take home there, 2550. The allowance for credit losses that is listed in the TB, it relates to previous year. It is treated as an expense. Shall be combined together with other credit losses for the year. But the allowance for year end, good people, we shall separate, and you will see that it's going to be given also. Right, stationary inventory at the beginning of the year. Stationary inventory. So good people, when you talk about stationary, right? Stationary is used up in the day-to-day businesses. So now the portion of the stationery that is used up during the year, it is expensed. And now that portion that is used up during the year, you will see how I calculate it. It's a nice calculation that is making sense. So now in order for you to calculate the stationery consumed, what is an expense is the stationery consumed, the portion that was used up during the year. The stationery is an expense. So I have to work it out. So now they gave me the opening balance. I will take it there. Then I will say stationery consumed. This is now my working for stationery consumed. You will say open bracket, good people. You put the opening balance, 3250. It is going to calculate itself automatically, 3250. So this stationery consumed, if you want to look at what was used up, you simply say what was there at the beginning of the year, that's opening balance, plus what was bought during the year, minus what remains at year end. That calculation will give you what was consumed during the year. You shall see after we have collected all the information as far as our stationery is concerned. Right. Sales, 462,800. So you come here, good people, that's your revenue, 462,800. You see where I'm writing it? I'm not putting it yet there because I still have to apply some prudence concept that might require me to separate certain things from that revenue line. So you put it far left first, or else you will cancel several times. Move. Inventory, 31 March 2019. So that's the inventory at the end of last year, which is the inventory at the beginning of the year, because our year end is 31 March 2020. So that becomes our opening inventory, 42,500. See where I'm writing things? I'm writing things on the left because additional information will follow. That might require me to make adjustments to those figures before I can conclude to say these are the final figures to show. Profit on sale of office furniture, right? Profit on sale of office furniture. There it is, good people. We agreed that now this will be a non-core activity and it shall be treated as other income. Later on, as we progress with our studies, you will be expected to know the calculation of that profit, and I'm going to show you. So that becomes other income. Profit on sale of office furniture. I think it was 3,280, 3,480, 3,480. It goes there, 480. Right, then I collect more information. Delivery expenses in respect of sales. It's key. Delivery expenses in respect of sales. I don't engineer this through sales line or whatever, separate it or edit. No. delivery expenses in respect of sales, that's a distribution cost. So, and their distribution cost, they come in there. Delivery expenses in respect of sales. So this one, in respect of sales, open bracket 3450. Also, you put it on the left, maybe there's some adjustment where they will tell you that they accounted for what something. Right, settlement discount granted. Settlement discount granted. To grant is to give. So if this is a discount that is given to our customers, good people. So applying the prudence concept, we need to go and reduce our sales with the amount of the discount that we granted, because we are not going to receive that money. If we leave our sales as that much, we'll be fools. We won't be applying the principle of prudence. We are not going to be wise. The wise man will adjust accordingly. Right, purchases, 391462. Purchases, they go in here, 391462. 463, 643, 643. 643. There is your purchases, good people. We move at delivery in respect of purchases, 6500. Now, delivery in respect of purchases, this is a direct expense incurred on purchases, and we capitalize it on purchases. You see me adding it there. Capitalized to purchases and not expensed. But in respect of sales, distribution expense, expensed. Sales returns, 7,000. Applying the principle of prudence of ultra, if you made a sale and you expect an amount of 7,000 to be returned, go and adjust your sales accordingly. Right, purchases returns, 2585. This represents what? The purchases that we returned to the supplier because they were of the wrong type, wrong quality, etc. We are not going to pay for those purchases, so we need to actually take them out. We are also applying the principle of prudence there. Right, settlement discount received. This one is us receiving it. You receive a discount when you buy. You receive a discount when you buy. And as such, we know that, okay, this is what we bought, but there's a portion of, I have to separate there. There's a portion that we are not going to pay there. And prudence concept, the wise man will do what? He will take out that portion that is not going to pay for. It is not part of the cost. You forgive me there, my space, 1523. 1523. Applying the prudence concept there, working out everything. All right, we move to rent expense, 27,000. It is an expense, it goes there. Rent expense, 27,000. We move, good people. Bank charges, this is also an expense, 1475. 1475. You see, I'm writing on the left so that now, if there's any adjustment, I am going to adjust accordingly. I'm going to adjust accordingly. Yes, I'll share the recording. So let's quickly just finish up this one. Right, so we were here, bank charges, depreciation. So depreciation, I will calculate it next time. It takes time. Interest expense, that one, we have to calculate the one that is incurred for the period. Unfortunately, our time is up now. How will I do it? Okay, you know what I will do, good people? I am going to record the workings for that question, right? And I'll share it in the group. Our time has been a limiting factor. I will record that and I will share it in the group, right? And yes, I will share it there. So I will record that question. I will be slow and explaining everything so that you can, even on your own, understand the principles. Sorry, our time was limited. We should have made it at least 2 hours, but I will send the recording of the question and this one. So thank you, good people. Let's end it here. Just go to listen to the recording and stuff like that. If you are willing to join the classes going forward, I'm going to share the details of the classes in the group there. So thank you, people. Our time cut us short. Right. So thank you. Yes, you're all going to pass, don't worry. All right, sharp, people.
Thank you.
Okay, thank you, bye.
Bye. Bye.
Bye, everyone.
Bye.